insurance than I do, but I'll nevertheless comment on that. There has been a fair amount of capital, and there was a rush of it about, I'd say maybe 3 years ago into the reinsurance business, but there's been capital come in, and that is negative for our business. I mean, because any capital that's brought in basically will get employed. We are willing at Berkshire, and we do it. We are willing to sit on the sidelines in the reinsurance business. We'll offer quotes, but somebody that will cut those prices substantially if they've got a lot of capital and want to keep busy. And if you've got a lot of capital in this business, or if you attracted a lot of capital, you will do something. You might like to do something smart, but if need be, you'll do something dumb. You'll rationalize it so you think it's smart, but you will do it. You won't just sit there and write to shareholders at the end of the year and said, we asked you for $300 million last year, and we'd like to report that it's all safely in a bank account at Citicorp. It just doesn't work that way. So they will go out and do something. People don't like to sit around all day and do nothing. And that means that prices will get cut under certain circumstances, and that's happening now. We will, at Berkshire, we do have a rule about downsizing on that, and we have promised people at all of our insurance operations that we will never have layoffs because of a drop in volume. We do not want the people who run our insurance business to feel they have to write X dollars in order to keep everybody there. We can afford some overhead around that's costing us a little money for lack of using it at full capacity, because it isn't that much relative to the size of our insurance operation. What we can't afford are people feeling some internal compulsion to keep writing business in order to keep their jobs. So we have a strong policy on that, and if the business falls away in terms of price, we won't be doing business, but we will be around to do business in a big way when the circumstances reverse. They reversed in the casualty business for a while in 1985 or thereabouts, and we did a terrific amount of business. They reversed in catastrophe reinsurance 4 or 5 years ago, and we became very active in that. And we will have times that are very good for us in insurance. It's a lot like investments. If you feel you have to invest every day, you're going to make a lot of mistakes. It isn't that kind of a business. You have to wait till you get the fat pitch. And in insurance, it's similarly. You do not. If we had a budget for premium volume for our insurance companies, it would be the dumbest thing we could do, because they would meet the budget. They could meet any budget I set out. I could tell some operation that wrote $100 million last year to write $500 million this year, and they would meet it. And I would be paying the bills for decades to come. So it's a very illogical way to try and plan 8 or 10% a year growth. Now, GEICO is a different story, in that GEICO is a business that is the low-cost operator and can attract from a huge pool business at I think, a very good rate of growth simply by letting people know what's available out there. So that is a business that I see growing under almost any circumstances. But our reinsurance business will swing around enormously in terms of volume based on what the competitor is doing, and what the competitors are doing depends to a great extent on how much money they've got burning a hole in their pocket. And right now it's going one direction, but it will change.